Welcome back to TechKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is trading below the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also continued to obey the Elliot structures, where we have fully maximized our target areas to the lower side in the formation of this wave 4, and I now believe that whatever we are seeing at the moment is the start of a massive bounce to the upside in the formation of these wave 5 to the upside. And before I get further into the technical analysis and also give you the short-term scenarios that I'm expecting to play out here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that AGIX, from these low prices that we had been trading within, we saw that massive bounce to the upside, obeying the Elliot structures, where you can see that we made our peak in the formation of that wave 1 at around the $0.13 mark, and after seeing the high for that wave 1, we started a corrective structure in the formation of that wave 2, and after seeing the low for that second wave, we started this bounce to the upside in the formation of this wave 3, in a move that has now given us a peak at around the $0.67 mark. And in the formation of that wave 3, which is an impulsive wave, I also expected to see a 5-wave structure in formation within the formation of that wave 3, where you can see that I have this Elliot structure in yellow, having the wave 5 fully maximizing our target areas to the upside in the formation of that wave 3. And after seeing our peak in the formation of that wave 3, whatever we expected next is a corrective structure in the formation of that wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum target area to the lower side in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, and that lies between the $0.44041 mark and the $0.36334 mark. And I have marked that target area here on the chart, which is a target area that we fully maximized. And after fully maximizing it, whatever we expected next is this bounce to the upside in the formation of this wave 5, and sketching out its minimum target areas to the upside in the formation of that wave 5 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gave me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.82431 mark, and that is the minimum that I'm expecting AGIX to do here on the long-term scenarios in the formation of this wave 5. And in the formation of that wave 5, I'm also expecting to see a 5-wave structure in formation, having the wave 5 of the fractal wave fully maximizing our target areas to the upside in the formation of that wave 5. And I believe we are seeing such a scenario over here, and if I zoom in so that you can see that better, I believe that after seeing our low in the formation of that 4th wave to the lower side, we saw this bounce to the upside, giving us a peak at around the $0.5 mark in what I'm terming as that first wave to the upside. Then we saw this corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that. And you can see at some point we had lost the fib level 0.618, and that made me to extend my target area back to the fib level 0.78, and you can see we continued holding within this target area. And after seeing our low yesterday at around the $0.038 mark, we saw a bit of a bounce to the upside in a move that gave us a peak at around the $0.47 mark in what I believe is the start of that bounce to the upside in the formation of this wave 3. And I believe that we have seen our low in the formation of this wave 2, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.64614 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. Then expect a wave 4 and then push even higher in the formation of that wave 5. And you can see that yesterday we had a bit of a run up to the upside, and it seems like that maybe was just a fake out to the upper side, giving us a peak at around the $0.47 mark, because you can see we are seeing a bit of another pullback to the lower side. And in case this breakdown continues, I'm expecting this red target area between the $0.41 mark and the $0.368 mark to continue holding for us to still say that whatever we are seeing over here is the formation of this wave 2, and this move can also give us one more new low in the formation of that second wave. You also need to have that in mind. But in case we don't have one more new low, then we can continue holding our target area to the upside in the formation of that wave 3 at around the $0.64079 mark. But in case we see one more new low in the formation of that wave 2, we can use the new low to sketch out a minimum target area to the upside in the formation of that wave 3. So to prepare you for the breakdown that we are seeing at the moment, we need to continue holding within this red target area for us to still say that we are in the formation of this wave 2. And in case we lose the Fib level 0.78, then we need to continue watching the next key area on the Fibonacci, which is the Fib level 0.88. And in case we lose that key area on the Fibonacci also, then that will be putting a major challenge on this Elliot wave structure that I have right here. So let's continue watching those key areas on the Fibonacci's, and also continue watching the 20-day MA, because a break above it and continue gearing up could be enough confirmation that we are continuing to push even higher in the formation of that wave 3. But as long as we are holding below it, we have the risk of making one more new low in the formation of that higher Elliot wave count 2 before we can expect that massive bounce to the upside in the formation of that wave 3. And also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 42 mark, meaning we have massive room for us to fully support higher prices and also lower movements here on the charts. Also taking a look at the MACD. On the MACD, we had printed a bullish cross over here, and at the moment we are just about to print a bearish cross, because you can see that we are seeing a bit of a sharp decrease in the buying momentum here on the MACD. So let's be patient and see how that plays out, and I'll be keeping you updated.